Hey, welcome to the Mortgage Minute, and the big news this week, of course, is the no vote in Greece. And, you know, it's not like this is a shock. We saw this coming. It was very predictable, but it's been predictable for years. Personally, I think this is a house of cards that has to come crashing down no matter what the European Union does. It's just inevitable that they have to let Greece fail. There has to be an exit out of the European Union, the euro. It's interesting, the Prime Minister of Greece says, "Today we celebrate victory for democracy. We've proven even in the most difficult circumstances that democracy cannot be or won't be blackmailed." Well, that's great to promote your democracy of Greece, but it'll be interesting to see how France and Germany react. And quite frankly, as far as I'm concerned, I think that this is an inevitable solution because they can't just keep having, as I say, the house of cards, bolstering a weak economy that's inevitably going to fail. Now, what's interesting is what's the fallout going to be and how is this going to impact Canada? Here's something is the EU debt crisis coming to Canada? Now, what's interesting, I was just reading this article, and he makes a really strong point that the entire Greece economy is about the same size as the state of Louisiana, so that in and of itself is rather a it's not really going to be critical to the global market. However, what are the domino factors, and what does it say about the region? And is Spain, for example, going to be next on the list? And if Greece fails and they establish a precedent, what is that going to do, and what will happen when it comes up for Spain's turn to go into default, etc.? That may very well have an impact on Canada. What I do know for certain is that all this translates into a prolonged period of lower interest rates because, number one, the European Union will fall back in their economic recovery, which is going to cause some stagnation in the United States. Excuse me. That's going to stall the Canadian recovery. And at the end of the day, all this translates into the inability for the Fed to raise rates south of the border, and it's going to be an inability for Canada to raise rates up here. Now, locally, bringing it back home, here was an interesting article in the Vancouver province about will the bubble burst. Very interesting. Some Wall Street investors are now getting involved and suggesting that there's going to be a chain reaction of the housing bubble bursting in Vancouver. In particular, there are Wall Street investors betting on Vancouver's fall and inevitable demise as well. Now, what's really interesting, and I'm not saying I got the answer to this, but the one thing we know about Vancouver is that we're bordered by water on one side, mountains on the other, the U.S. border on the other. You know, we're an insulated area in terms of real estate landmass. So as we see, and we just had the World Cup, a Women's World Cup in soccer, brought a lot of people to Vancouver, brings a lot of attention. The foreign money that pours into this city is unprecedented in terms of Canadian cities, and there's going to be an further influx of people wanting to live here, and there's nowhere to build but up. So they're going to have increased density. I'm not so certain we're going to have a bubble bursting, but here's something I am certain about. There's going to be a continuing divide between single-family homes and multifamily homes. So apartments and condos might have a softening and a slide, but they're building more of those than they are single-family detached homes. So you're going to see a continuation of values increase in single-family detached. That's my prediction there. And wrapping up for this week's Mortgage Minute, we talked about real estate. Interest rates are still low, so it's a fantastic time to look at refinancing, as we mentioned last time. And here's something I thought was very interesting. Many Canadians are forced to retire early. And I got to tell you, I've been working with Canadians on their financial plan, talking about whether you should be investing in stocks, bonds, private equity, or real estate. Regardless of what it is, the common thread I'm seeing with everybody, especially if you're between 35 and 55, is the lack of a plan. And if you start to find yourself being forced to retire early, having a strong pension and having a plan is more important now than ever before. So I cannot emphasize enough the need for planning and the need to book a consultation. So I am more than happy to sit down with any of you. If you want to book a consultation, just go to peterkinch.com, send me an email at peterkinch, and I am very happy to arrange a free half-hour consultation with you, even if it's just to review your current portfolio. Thanks. That's the Mortgage Minute for this week, and we'll catch you again next week. Bye.